Gold hit another new all-time high this week, trading just over $2,800 an ounce for the first time ever in its continuing series of new all-time highs this year. Meanwhile, we got the U.S. non-farms payroll report this morning, and it indicated the U.S. created an anemic 12,000 new jobs in October, a stunning reversal from September's blockbuster report. In this gold market commentary for November 1st, 2024, we'll take a look at the latest charts for gold and silver, go over some of the latest U.S. economic information, talk a little bit about what's happened in the Middle East, and of course, go over some of the great values that we have to offer in the physical precious metals market arena. Hi, I'm Dana Samuelson, president of American Gold Exchange in Austin, Texas. We are a national physical precious metals and vintage U.S. gold and coin dealership. If we can help you with any of your buying or selling needs in the physical precious metals arena, we'd love to have that opportunity. In this gold market commentary for November 1st, 2024, U.S. employment plunges in October, and gold is holding and setting new highs despite a stronger dollar and higher treasury yields, which normally would push gold lower. Meanwhile, in the Middle East, Iran has this week vowed revenge against Israel's strategic response attack to the Iranian ICBM attack, which occurred about a month ago now. We've got the U.S. election finally right around the corner, and it is a toss-up. It could go either way, with potentially big changes for the country, depending upon who our new president is. And of course, we'll go over the latest charts for gold and silver and some of our precious metals specials. So let's take a look at what's been going on with the U.S. economy, and specifically this anemic October jobs report of just 12,000 jobs. This is a bar chart that shows how many new jobs the U.S. has created every month, according to the Bureau of Labor and Statistics non-farms payroll report. As you can see, since December of 2023, the trend has been for fewer new jobs on a monthly basis. It's lumpy, but October's report of just 12,000 new jobs was particularly weak. Now, there are mitigating circumstances with the two hurricanes that hit Florida and then went up through Georgia and into the Carolinas, as well as the Boeing aircraft manufacturing strike. But analysts anticipated about 100,000 new jobs this month, which would be right where that red line crosses over the top of the area where the bar would be if there were 100,000 new jobs for October of 2024. But you can see the trend has been down, and we did get lower revisions for the last 2 months, and especially for August, which was revised down, I think, 86,000 jobs, a big downward revision. But I think the biggest takeaway from today's BLS employment statistics is that the private employment sector created a negative 28,000 jobs in October, while the government created 40,000 new jobs, giving us a total between the two of 12,000, which equals the total new jobs created. Now, over the last 6 months or so, government and healthcare have been the biggest source of job creation in the United States. But when the private sector loses jobs, that's a problem. And this may be part of the reason why Chairman Powell decided to pivot from the defense of inflation a couple of months ago with that jumbo 50-point basis rate cut in September to defend the unemployment market or the employment market of the U.S., because it's jobs and job creation are the heart of the U.S. economy. Now, when you look at the economy, it still seems to be performing pretty well. Let's take a look at a few other factors. This is the weekly unemployment insurance claims that are filed. And I brought this to your attention a couple of updates ago when we had an outlier at a high of 260,000 jobs. That's that red circle around the blue dot off to the right. The last three weekly unemployment claims have been lower, and that's that oval that holds those three blue dots. But the the red trend line is still for higher unemployment weekly claims. The latest blue dot came in at about 215,000, which was pretty low and was better. So it's possible that Hurricane Helene, when it hit, offset that blue dot all the way to the top in the red circle, which is what I discussed at the point in time that happened. So from an unemployment claim situation, we're not doing so badly. And from a GDP standpoint, the U.S. economy still is doing fairly well as also. You can see the latest Q3 estimate came out for 2024 at 2.8%, just a little bit under the Q2 3.0% GDP report. So GDP for the last 2 quarters has been pretty good. So that leaves us in a state of, contradiction with weak jobs, but a pretty good economy. So we'll have to see primarily how the jobs market or jobs creation goes over the next several months to get a real direction of how this is really going to go. Moving on to the Fed, this is a bar chart that shows the betting, what the markets are betting the Fed will do at the conclusion of their meeting on November 7th. And this is about as certain as you can get, with almost 98% of the money on a 1/4 point rate cut at the conclusion of the Fed's meeting November 7th. And the weak jobs report that we just got pretty much locks this into place. So we will almost certainly get a 1/4 point rate cut out of the Fed at the conclusion of their meeting November 7th. But in the meantime, between now and then, we've got a presidential election about to happen. And boy, it's going to be a doozy because it's a complete toss-up. This is from the New York Times, showing the polls both nationally and for the swing states. And following presidential elections for most of my adult life, this is about as close as I've ever seen it ever. So this is a complete toss-up according to the polls. So we'll see how it goes. But right now, it's anybody's guess who will be our next president. And we won't know on election night because of all the mail-in ballots that have been sent in, and they've been considerable. It'll take states like Pennsylvania time to count them. Last time we had a presidential election in 2020, Pennsylvania was the key state counting votes, and it wasn't until Saturday afternoon that Joe Biden was declared president. So we'll have to see how long it takes this time, but it could be several days or more before we have certainty over who will be declared the winner. In the meantime, let's look at the interest rates. This is a 10-year Treasury yield, which has surged from its September low of 3.65%, as you can see at the bottom right of that chart, all the way up to 4.36% today, which is a big rebound. And normally you would expect that to push gold lower because the Treasury yields and the gold price tend to be inversely correlated. But that's not the case with gold right now. And you can see off to the top, the federal funds rate in black. I've penciled in what we anticipate to be the 1/4 point rate cut, bringing the Fed funds rate down between 4.75 and 4.5%. And that's the closest these two have been in differential for over 2 years now. So we're seeing a real narrowing of the Fed funds rate with regard to the 10-year Treasury yield. And the 10-year Treasury yield is rising, I think, for a couple of reasons. One is that we had a weak auction this past week, where buyers of the 2-year and the 7-year notes were demanding a higher yield for the risk they're taking investing in the U.S. debt market. And that's causing the bid to go down on the bonds themselves and the yield to go up. But if you look at the dollar chart, which is next, and here it is, you can see we've seen a big rebound in the dollar as well. And this is a big rebound from the low that it had in September under major support at 100.65 on the dollar index. now to testing midterm resistance at 104 and a quarter. And we've poked over that a couple times in the last 2 weeks. I think a lot of this dollar bid has to do with the fact that the US economy continues to be the best economy in the world. And if you have money, say in China or in Europe or Asia, where there's conflict, safe haven is the United States. And to get into our markets, to get into our treasury markets, to get into our stock markets, which have been doing well, you've got to buy the dollar first. So I think this dollar strength has more to do with global economic weakness and turmoil as much as it has to do with US economic strength. So both of those are coming to play here in the dollar, but it looks like it's trying to top out a bit here. We'll have to see. Time will tell. So the dollar's been stronger. Treasury yields have been stronger, yet gold has set another new all-time high. And we'll get to the gold chart in just a moment. First, I want to talk a little bit about the Middle East. I was a young growing man in the 70s. I remember the 1973 Arab-Israeli war. I remember the oil shocks that we had from the oil embargoes. I remember Henry Kissinger shuttling around the Middle East and creating the petrodollar in 1974, which helped to cement the dollar's status as the world's reserve currency after we got off the gold standard in 1971. And I remember how dangerous the world seemed at that point in time during those conflicts. And again, in the late 70s, when Iran seized 100 US hostages and held them for over a year in our embassy in Tehran. And the real concern I have with the Israeli-Iranian conflict that's going on right now is that we've crossed the Rubicon in what used to be something that you would never expect to happen, to see these two countries exchange direct fire with each other. And now they've done it 3 times, and Iran has vowed revenge for the latest Israeli attack. And Israel, since they were attacked by Hamas a little over a year ago, has been relentless in reducing the threat posed to Israel by the Iranian proxies of Hamas, which has been decimated, and Hezbollah, which has had their leadership decapitated. But their 2 strikes that they've militarily had on Iran have been pretty strategic, including this last one, which was less dramatic than I think the whole world expected it would be. Israel did impair Iranian air defenses and did destroy Iranian ballistic missile facilities, which are part of the war machine that Iran uses to attack Israel with. I wish this was a better situation than it is. And to kind of track how much this is tracking into the gold price, I created this gold chart a couple months ago, and I've been following it. And this is the first time I'm sharing it, that shows every time an event has occurred, when it happened, and where the gold price was at that point in time. And as you can see, gold has climbed a pretty steady wall of worry as each one of these events has unfolded and ramped up, and as we've gotten into a bigger, more widespread conflict, with gold now breaking $2,800 an ounce. So as long as this conflict continues, it's really going to help to buoy gold. And we do see $3,000 gold in sight now, but there's more fundamental reasons for that. We'll get into that in just a second. But I don't want to discount how serious the situation is between Israel and Iran at this point in time. And that's the whole point of me bringing this to your attention. So let's take a look at what else is underpinning the gold market, which is central bank gold buying. We got the latest statistics from the World Gold Council for Q3 2024 off to the right. And that black line across the chart at about 675 tons shows you where we are right now this year as of the 3rd quarter for central bank gold buying. So the 3rd quarter of 2024 is about the same as the entire gold market consumption was by central banks in 2018. That print's pretty small for me to read. The point here is 2022 set a record on the back of the sanctioning of Russia following their invasion of the Ukraine at about 1,089 tons. 2023 set a second record at 1,037 tons. And the red arrow shows you where we were last year at the end of the third quarter for central bank gold buying, and where we are today at the end of the third quarter for 2024 central bank gold buying. So I think cumulatively, central bank total gold buying for 2024 will be the third highest, but it'll be a little bit under 1,000 total tons, probably somewhere between 900 and 950 tons, which is well above about the 500 tons that they averaged between 2011 and 2021. So central bank gold buying is going to continue to underpin this market. And I do think the higher gold price is having an impact on some of this central bank gold buying. But still, it remains very strong, and it's a trend that just is continuing. So let's get into the precious metals charts. This is the one-year gold chart, and you can see on a 12-month rolling basis, gold is up about 39%. It continues to have one of the best years it's ever had since it entered the free market trading in 1971, and that includes the late 70s. It's been on a completely relentless tear since late July, early August, as you can see by the blue trend line rising higher. The last update I gave you, gold was at 2708. It's up almost another 100 since then, peaking at 2801. It's a little bit lower today on Friday, right around 2750, but it's holding trend higher despite a higher dollar and higher treasury yields. The gold has just been relentless, and it's only broken that trend line just a little bit on that dip that we talked about in our last update. So gold remains very solid. And again, we've got $3,000 gold in our sight now, which could happen before this year is over. Time will tell. This is a 6-month candlestick chart that basically shows the same thing. We've had a couple breaks of the trend line, but just briefly, and gold today is over trend on the candlestick chart, so it could come down a little bit and still be in an uptrend. The gold remains very, very strong and solid, and it is leading the precious metals complex higher. But silver is finally trying to break out. This is a one-year silver chart. In our last update, I talked about the inverse head and shoulders pattern that was developing, and not long after that, when silver was at 31.75 during that update, silver did break that resistance at 32.50 on the one-year chart, as high as 35.04, which is a classic breakout. But now it's giving up some of those gains, and it's back down to about 32.50 today. Year on year, 12 months rolling basis, it's a 43% gain. It's a bigger gain for silver than it is for gold, but silver's more volatile. Gold continues to lead, and silver is now trying to follow. So we'll see how this can go. As I detailed in our Is Silver Ready to Run video, there's a lot of strong fundamentals under the silver market today that'll help to hold it up. And at this gold price, I continue to believe silver should be in the $40 to $45 range. Here is a candlestick chart that reiterates the same thing. You can see the volatility on a daily basis more clearly here, much more choppy than gold has been. And the breakout that it had, which was really sharp, over 32.75 on the candlestick chart a couple weeks ago, running all the way to 35, but not being able to hold that gain very fast, stabilizing a bit, and now selling off a bit. So silver's trying. It's really trying, but it's having a little bit of difficulty. We'll have to see how things continue to progress, but I continue to believe silver is the undervalued of the precious metals for most people today because of the gold to silver ratio, which continues to come in high at 84 to 1 today, with gold at 27.45 and silver at 32.55. That's very high on the chart, meaning silver is undervalued. We don't talk much about platinum and palladium because we really don't have much demand for it, but we've seen a breakout in the palladium market in the last 2 weeks, and that's primarily because there's talk of sanctioning Russian palladium sales, which will reduce the available palladium in the market dramatically. Now, there aren't sanctions in place now, and palladium did break out, but it's given up some of those gains just like silver has. If any of you would like me to talk about platinum and palladium, I'll be happy to do that, but they remain undervalued today, in my opinion, but I just don't see a catalyst to make them really move higher and hold those gains, which is why I've shied away from detailing them in these updates. In the meantime, in the physical precious metals arena, the 2025 issues are coming out. The Royal Canadian Mint's always one of the first mints to release the new dated coins in advance of the new year. The 2025 Maple Leafs in gold and silver are out, and the British Royal Mint is following suit with their Britannias. So these are available now. We may need a little bit of time to get them shipped to you, but they're being priced by the mint distributors for shipping in the very near future. The U.S. Mint is always late to the game. They don't really start delivering product till the first or second week of January, although we're already seeing some of those coins priced in the market, but they're still a full 2.5 to 3 months out for delivery. So we'll start pricing them in the next week or so. In the meantime, we still have some great specials in the silver market on Asahi Silver Rounds, 2023 Britannias, there's a few left. And we also had a few 2024 Silver Eagles that we could offer, but we're almost out of those. And we've got a $20 Liberty special, the MS64 $20 Liberty, which is the scarcest of the big four coins in MS64 with the best previous track record. It's a great value today, an extremely low premium relative to its gold content and especially its scarcity. So if you want to learn more about that, please talk to one of our account managers. And speaking of that, as always, I cannot thank you enough for your loyalty and support over the last 26 years. Without clients like you, we do not have a business, and there's never a day that goes by that we aren't grateful for the loyalty and trust that you've placed in us. And the only other thing that I would like to say is please vote. Now, the price that we have for our freedom is extremely high, and it can be found in our military cemeteries around the world. That's the price of freedom. And our ability to have a democracy and to vote has been gained on the backs of those lives lost in conflict. So please do your patriotic duty and vote. And good luck. And thank you for everything. And we'll be back in touch soon.